So, hello everyone. Good afternoon. I, along with my other GAP team members, would like to welcome you all to yet another series of our GAP monthly webinar. So, finance has really become such an indispensable instrument of today's life, and I think we really cannot imagine our life without it. There is one saying that if you take control of your finances today, you won't be victim of it tomorrow. So, with that one quote, I think it perfectly sums up what we'll be expecting in today's webinar. So, without doing any further ado, I'd like to invite our speaker, Thomas Savorji, to give us presentation on financial literacy and budgeting for young professionals. Talking about our speaker, Thomas is a seasoned chartered accountant with 12 years of industry experience, specializing in international trade, funding, and football talent development. His expertise includes financial modeling, auditing, business planning, and strategy implementation. He previously served as the finance manager for Kotoko Sporting Club and is a member of ACCA UK and ICAG Ghana, holding a business administration degree from Kwana University of Science and Technology. Thomas now leads Nova Talent Management Limited and serves as CEO of Vasco Consult Limited, providing audit and financial management services to SMEs. So, having said that, Thomas, we'd like to welcome you to this webinar. Now, you can go ahead with the presentation.
My pleasure, and thank you very much. Good afternoon, everyone, and it's my pleasure to be the person leading this discussion. I want to look at it as a discussion because, like you have rightly said, finance is inevitable for everyone. But this afternoon, we want to fine-tune it and look at it at the perspective of young professionals. Okay, so time is limited. I have some few slides I want us to go through. So after going through, I will allow for questions so that we can discuss the questions. And if somebody asks a question and you have something to say about it, you can leave a comment in the comment section. And then let's separate the questions from the comments so that all the questions can come in the Q&A so that when we get there, we can focus on them. So generally, we want to look at why financial literacy matters, how you will maintain a healthy balance sheet. If you talk about a balance sheet, what does it mean? Then savings versus investing, very important. Then some investing options for professionals. Then some tips on investing. Then we look at budgeting, and then we take some questions and answers. Okay, so we are saying that finance affects all of us, and the ability to make sound financial decisions is fundamental and very important. Yes. So, as I said earlier, it's inevitable, and now going out and now coming in, our decisions, our actions, our events are underpinned by financial decisions. Now, we said financial literacy is the ability to understand and effectively use financial skills and knowledge. Good. So, by attempting to define financial literacy, we are saying that it is the ability to understand. Okay. So, we want to understand and effectively use financial skills and the knowledge that we have in financial literacy. Okay. Then budgeting is also a key part of financial literacy. Yes. Helping to manage income and expenses. That is all about budgeting. but when we get there, we will delve a bit into it and understand it better in our perspective as young professionals. Now, I've also attempted to define a professional. So who is a professional here? A professional is someone with specialized knowledge and skills in a particular field. Yes, so I will call myself a professional as an accountant. Someone will call himself as a professional as an architect. Someone will call himself as a professional as a medical doctor, as a pharmacist, as a marketer, as a lawyer, okay, and so other things. And there are some specific or mainstream professions that we know, like so an accountant, a lawyer, a medical doctor, engineer, yes. But there are other ones that you can develop, and you can count a niche for yourself. What we are saying is that in all these respects, there are financial obligations, there are financial decisions to take, and our personal finances is very important for all of us. So we are saying that why financial literacy matters. Okay, so one, it helps in making informed financial decisions. Okay, financial literacy, your financial skills and knowledge is very important for you to be able to make informed financial decisions. Don't leave financial decisions for somebody, or you think that somebody is an expert. I think it's our personal responsibility. So you should know and be able to make informed financial decisions. Two, it promotes savings and investing habits. Yes. The next item we are going to look at is saving versus investing. So your ability to know financial literacy will promote your saving and investment habits. The third one is that it reduces financial stress and promotes independence. Good. The next one we say essential financial literacy is essential for long-term wealth building. Okay, so what it means is that it's in stages. Okay, so one, get knowledge. Two, develop interest. Three, start saving. Okay, it's in that pyramid. Three, start saving. Four, invest. Five, build wealth. Okay, so these stages must be followed. Then we said that financial literacy will give the ability to interpret and analyze financial statements. Yeah. Ability to interpret and analyze financial statements. The graphical representation here is showing a balance sheet. It's in a topic we are going to look at it. Don't let us limit this to expert that no, this is not your area or what have you. Let's have the ability to interpret and analyze financial statements, because as young professionals, we have the opportunity to take certain positions. Okay, you are a medical doctor, then you may be part of management or you may be part of the board of directors. If the finance team bring their financial reports, what they are saying doesn't make sense to you, do you follow them? Are they deceiving you? You should have certain financial fundamental understanding so that you'll be able to flow with them and be able to question them and keep them on their toes as a management team or as a board member. And there are other important reasons why you should make yourself, you should have knowledge of financial literacy and financial terms. Okay, so now I want to start by saying that we have to maintain a healthy balance sheet. Now, what is a balance sheet? This equation is the basic understanding of a balance sheet. Okay, so financial accountants at the end of the year. So let me take it at the business perspective. But when you understand it from the business perspective, then it will apply to you at the personal level. So as a business entity, financial accountants or auditors, they will prepare so many pages of financial reports. Okay, this number of pages can be limited to only 5 items. Okay, now these 5 items, 2 of them are put together to make the first item, which is the asset. Then you add the other 2, making 5. So if you extend this equation, you are going to have your income, your expenses, assets, capital, and liabilities. Now, we are saying that asset is equal to capital plus liabilities. Okay, so here what we mean is that all assets that a business entity is having. Okay, so let's take a global company like what company? Say Toyota. Okay, so now we are saying that all the assets that Toyota is having, it is equal to capital plus liabilities. Now, how they will develop, so assets can be so many, okay, and you can have various categories like cash or fixed assets. Okay, now what will make up their assets? You will have income that they have generated over the period minus their expenses. So the residue comes into what forms the asset. Now, how have they financed these assets? So if their total asset value is about $100 billion, okay, their total asset value is $100 billion. It could mean that 80% of that $100 million was financed by their own efforts, and that is capital. Then the difference of 20% is financed by other means, not coming from them. That becomes liabilities. So let's follow the argument. The total asset that the company is having is either 100% by their efforts or 100% by their efforts and 0% from outside contributors. Or by all means, there's always the self-contribution. And the more self-contribution there is, the better for you, because then it becomes your own. There is no liabilities. You know, you see that liabilities in the general term is negative. So you control it as much as possible. Okay. So as a person, what we mean is that try to develop and increase your asset level. By doing so, you have to make a decision between how much you are contributing personally and how much you are contributing to your assets from other means apart from your personal efforts. Okay. Now, looking at personal level, so your assets could be so as a professional, your first asset could be, in terms of business, they will call it goodwill. Okay, but personally, your goodwill will be your ability to generate more resources. Okay, so the first thing is your professional certificate that you are having. Okay, that is the first fundamental goodwill and your ability to generate more resources to increase your asset level. So how are you valuing that certificate that you have now? Okay, that is why we will all be a professional accountants, but because of certain circumstances, you are using that professional ability and generating 10,000 Ghana cedis every month. Somebody with the same professional qualification is also generating a revenue of 3,000 Ghana cedis a month. Okay, it is possible, and it's something to think about. Okay, so how will you be able to bridge the gap that with the same qualification you are able to push your earning capacity from the 3,000 to at least a double of that, and then plan that maybe in the next 3 years you should be able to be earning about 10,000 Ghana cedis. It's very important. So you can, so the certificate generating salaries or personal income from you is your capital. Then if you want to borrow from bank, you want to borrow from friends, you want to borrow from family to be able to do other things for you to be able to generate more resources and then build more assets, that becomes liability because you have to pay back and pay with interest. So it's ability for you to manage them. Okay, so assets, you can talk about your goodwill, your professional qualification. You can talk about physical assets like a building, vehicles, what personal belongings or other assets that you value. Okay, now let's move to the next item. So let's look at savings versus investing. What is saving? So we said that saving is setting money aside for future use. Let's take it like that. So you are setting money aside for future use. That is saving. Okay, that's the monies that you receive, the one you set aside for future use, you won't touch them. That is your saving. Okay, now investing is growing your money through assets. I've already given the first terrain. So saving, then saving into investing. Now the difference between saving and investing is that savings will not grow, savings will not add interest, or savings will not appreciate in value. But when you invest the savings, that is where it will grow, that is where it will appreciate, that is where it will increase, that is where it will double. Okay, now there are a lot of financial institutions to help us save or invest. For example, commercial banks and investment banks. Yes, so savings is to commercial bank, and then investing is to investment banks. Now let's try to put some of these things into perspective. Okay, I will take Ghana for example, and it is general across Africa, across Europe, across the world. Okay, governments regulate financial institutions. Now they will broadly provide two regulatory bodies. Okay, so if you take Ghana, you have the Bank of Ghana. Okay, so Bank of Ghana regulates commercial banks activities. Then we have another body called Securities and Exchange Commission that is regulating investment activities. Okay, so what it means is that as a company, you either come as a commercial, as providing banking services and come under Bank of Ghana regulation, or you are providing investing activities and you come under Securities and Exchange Commission. Okay, so generally banks exist that they will take savings, they will take deposits, and then give out loans to other people that need them, so that they will make interest from there and make revenues and make profits from there. And they make sure that your money that you have saved with them, it will be safe. Good. So it's just a interchange of F and V. So your savings that you have with them, they will keep it safe, and whatever time you want to withdraw, you can take it in peace. Now, investment banks, they will take your, they will have a contract with you, take your monies in an attempt to invest it, and then add more money on them for you. Okay. Now, your ability to invest is your own responsibility. Okay. Although the investment banks, they have been licensed and regulated, okay, you are expected to, the onus of your investment decisions is upon you. Okay, we will come back to that. Now, you said that there are several financial products that to help us meet our investment goals. Yes. So there are general investing financial products, okay, but financial institutions continue to develop more financial products day in and day out to be able to help us. One thing we must also understand is that in our part of the world, like Ghana, our markets are not liquid, okay, or they are not efficient as compared to maybe Europe or America or other developed countries. What I mean by an efficient market is that if you do an investment and then you want it back, how quickly can you have it? So, for example, in the US and in the UK, for you to understand efficiency of the market, their markets are more efficient in the sense that somebody can make an investment today in the morning, then in the evening, when it appreciates, it can take it back. But in Ghana, you could do an investment. If you want to withdraw, it could take several days or even weeks before you can get it back. But all the same, there are pros and cons to it, and it's your choice to know which one works for you. And that is the more reason why some of these discussions are very important, so that you can understand some of these issues and then know how to take decisions on them. Okay, so let's look at a very interesting but maybe controversial product we can think of. So, investing options for young professionals. Yes. So the first item on the list is government treasury bills. So normally what you say is that is the first option for you, and it is termed as risk-free. Risk-free because treasury bills means that you as the professional, you are lending money to the government, or government is borrowing from you. So at the time of the contract, you agree on how much government is going to pay you as the interest. Okay, so in Ghana recently, before the change of government, treasury bills rates went as high as 30% per annum. And be careful and be mindful that one basic thing you should also understand is that treasury bill rates or financial instrument rates are normally quoted in annual terms. So if you say 30% treasury bill, it means that the 30% is for a period of 12 12 months or 365 days. Okay. Then treasury bills, you can have 90 days, 91 days treasury bills, 182 days treasury bill, or 1 year bond. Okay. So if it's 30%, and then you are doing a 91 days treasury bill, so your interest that you are expecting is 91 over 365 times the 30%. Don't assume that, oh, you are getting a 30% on for the 91 days that you are doing. You'll be disappointed. Okay. Now, one other thing too is that if you want to buy treasury bill, there are also two options. You can opt for interest. You can opt for interest or a discount. Okay. Now, the interest means that take the money, put it in the bank. Then when the treasury bill matures, I'm coming for the principal plus the interest. If it's a discount, I'm telling you that take the money, calculate the interest, give it to me now. When the time is due, I'll come for my principal. Okay, so those options are there. If you are financially literate, you will know this, and then when you go to the financial institution that you want to buy government treasury bill, you can actually tell them this is the option you want. Okay, and then if your money is huge, you can actually negotiate the interest rates for a better term. Or you can also tell them that, okay, I have this money, keep it in government treasury bills. Every 3 months, pay me the interest that I've earned and keep the money there. Or take this treasury bill, invest it on a 91 treasury bill 3 months, every 3 months. Then when the 3 months is due, add the interest to it and roll over. Then the next 3 months, the 6 months, you add the 2 interest and roll over. So you can grow the money in that way. Now we have governments and private bonds. Bonds, they are just loans. So they also come at a fixed interest. Then the next option is the shares. So shares simply means that you want to own a part of a company. Okay. Now, if you buy government treasury bills, if you buy government or a private company bonds, you can't call yourself part of the owners of the business. But if you have shares in a company, you are an owner of the business. And there are regulatory and documentations, legal documents that will demonstrate that. The next interesting thing is mortgage. So mortgage simply means a loan to buy a house. Okay, it is a loan. It's a financial instrument that is structured in such a way that the underlying item is a property. So it's very important as professionals to consider and make important financial decision on mortgage. Okay, you've completed school, you are a professional. Definitely, you are going to receive some consistent revenue over a long period of time. One key thing that you cannot avoid is rent payment. So, do you want to go and rent that posh apartment and be paying rent? Yes, you can afford it. Sometimes your rent payment is only 10% of your revenue. Okay, or you want to convert that rent payment into a mortgage. So it means that you are going to sign a contract with a bank and say that, okay, I've seen this apartment, they have option for mortgage. So I want to be living in that apartment. Then you pay for the apartment for me in full. Then give me 15 years to be paying you the bank with interest. Is it not interesting? Yes, that is possible, and that is mortgage. But Some people would think in the short term that, hey, this rent that I'm paying, the rent is only 10% of my revenue, or let's say 20% of my revenue. But if I want to take a mortgage, the bank says I cannot take a mortgage for more than 15 years. So if I want to take mortgage instead of rent, it means that I have to be paying 45% of my monthly salary as mortgage. The person saying this has forgotten that in the next 12 months, in the next 18 months, your salary might increase by 20%. So why don't you squeeze your salary and push the 45% into the mortgage now? Now, when your salary increased by 20%, then it means that your savings have also, the remainder of maybe 55% has increased. So maybe your mortgage can come down to about 30% of your salary, and then you have about 65%. Then in the next 2 years, when your salary increase again, or your earning capacity increase again, your mortgage might come to about 20% of your total income, and on until it comes down for you to do this, so that you know that you are paying for where you are staying, but it is in terms of transferring ownership from the owner of the mortgage to you in future. Okay, let's consider that. Now, blockchain. Blockchain. Why blockchain? Blockchain is the general term that is given to some of these new developments and technology. Okay, so for example, you have, and there are a lot of blockchain products that have been developed, and even governments and sovereign institutions have developed a lot of these products, like Bitcoin, and then all those ones you can talk about. There are very genuine ones, but most of them are very risky. So please, it's very risky, and you should be very careful how you choose to do this. Okay, now the next item is insurance. What is insurance? You are putting money aside to mitigate a certain risk. Okay, and insurance companies want you to be specific. Is it life insurance you want to do? Is it motor or an asset? So that in the event that unfortunate happens, they will pay you that money. Then the last thing on my list, I have business. One investing option you can look at is to invest in a business. But please, it's not easy. It's not easy to do business. So you choose between do you want to do it as a passive thing? You buy a store, somebody is managing it for you, or you come as partners, somebody is doing it and you are also doing your professional work, and then once in a while you look at the activities. You may get genuine people and very people that will be truthful to you and honest. But if that doesn't happen, it's crazy. It's crazy because you might have taken loans, you sit and be paying the loan. Personally, when I completed university 2011, 2012, somebody approached me with a business, and I ran the figures, and then I said, okay. I went to bank and borrowed money on my salary and gave to the person that, okay, take it. And per the revenue projection, the monthly repayment for that loan is only 5% of the monthly revenues that will be coming. So I said, oh, this one is too good. But look, even the first repayment that the person should bring was a fight. The second month, I have to pay. The third month, I have to pay. Now the person is saying that my family, my daughter is going to school, Me, I've not even started a family, but you have a big family, and then it means that the business that we're supposed to do, just give me 5% of the revenue that is coming to just be paying the loan. I don't mind if I don't get any profit from it. At the end of the day, I can't say the number of months that were paid for the loan. The rest of it I have to pay. You understand? There are other businesses too that I have done. They are fantastic. So what am I saying? The fantastic one came to pay for the bad business. I think the time is running, so I'll run through the rest and then we can take some questions. Or I don't know if there will be some few minutes that will be added. Let me know. So I have this arrow here. At the top here, we have the low risk, and then bottom here, we have high risk. It means that government treasury bills coming down, they are low risk. You don't have any headache, okay? But when you come deep down, blockchain, my brother, business, my brother, think twice and put it into prayers. Now, let's look at some tips on investing. One, start small, but be consistent. Everybody must must invest, no matter how small it is. Do it. Set an investment goal. Is it a car you want to buy? Is it a mortgage? Is it traveling, retirement? African people, we are always thinking about the whole family, extended family. My mother's grandfather's brother has died. I have to go and show off. Please rethink. Investment first. Save first before spending the rest, and not vice versa. Please circle this and reread again. I'll repeat it. If it is possible, avoid borrowing completely. You know, financial literacy and your mental health is highly connected. So let's be careful. Okay, you need your peace of mind to go and give your professional advice. As a doctor, you put those things in your ears and be checking your patient and all those. If you don't have a sound mind, please, you will cause more trouble. So your financial literacy and then mental health, they are highly connected. Make sure they all produce positive results for you. So if you don't need it, don't borrow. As professionals, you think that, oh, every month I'm receiving salary. If I go and take this loan, they'll be deducting. You will take the loan, like I've told you. I took the loan, give it to the person, do the business so that we will get some good savings. It didn't work that way. If it's possible, avoid it and build the assets and all that you want from your income. Investment advisors are not responsible for your financial decisions. The responsibility rests on you. Yes. So if you walk into an investment bank, you say you want to do this, they will make recommendations. All that they say, it's not that they will give you the best advice. No. The choice that you are making is your own responsibility. They will only give recommendations. And if you become critical, the law shield them. Okay? Let's know this. Get regular updates on your investments. You see? Make sure you are checking. If it's a treasury bill, oh, that one, government will not borrow from you and say that you can't pay. The worst of, he will borrow from somebody else and give it to you. But if it shares, you are trading on the stock exchange, you are doing some risky investment, you need to be getting updates constantly. Don't let your blood pressure escalate one day just because of a financial decision you took. That is why we are learning some of this so that we can live a happy life. We are also saying that create a diversified portfolio. Now, what is a portfolio? Portfolio simply means that a basket that is containing different investment options. So you can put small treasury bill in, you can put small bond in, you can put small shares in, you can put small blockchain and small business. Okay, make sure that the ones that are in green are more, so that you can have a peace of mind. Let's continue. So if there are some few questions that have come, we can address them, then we can look at budgeting briefly. Okay, okay, let me start from the top so that
Hi, Thomas. I can already see one question. So
okay.
Lizu is asking, what's an example of institutions selling government treasury bills?
Okay, thank you, Leju, and it's been a long time. I hope you are fine. So if you are asking for institutions selling government treasury bills, and normally, like I've explained, treasury bills are loans to government, okay? But the government have given this opportunity to the commercial banks to do on their behalf, okay? So what it means is that anytime you want to buy a treasury bill, you walk into a commercial bank and then you deposit the money there. They will do the paperwork and then that's it. The money goes to the government. I think in Ghana, rural banks also does same, or maybe some financial institutions can seek that opportunity to buy the treasury or trade the treasury bill on behalf of government. Thank you. Okay, so I think I can continue. Or have you checked the Q&A?
Yes, I mean, we also have another question. Can you recommend for us some of the blockchain products that you know? It has been asked by Molly.
The first one that comes to mind is the Bitcoin, but it's not attractive now because now the price is high. At a point, it dropped down. Okay, normally for general investment products like shares, like the blockchain products, okay, and then minerals like gold. If you want to invest in these assets, it's better you invest in them when the prices are low. Okay, so when the price, maybe the current price is about 100 per share or per gold or per coin. Okay, when it dropped to about 70, that is the good time for you to buy. Now, the positive aspect of it is that you are expecting that it have reached 100 before and now it's 70. So you pray that it will move to 120. Then you've gotten 50 more profits. Fantastic for you. So turn it upside down. What if the 70, you got it at 70 and then now it have come to 50? What will you do? That is investing. So what the advice is that when it comes low, you hold it. So if you bought it at 70 and then maybe it comes to 68, don't worry, hold on, wait. It will move to like 80, then you can sell it. One other thing too is that don't be too greedy. If you bought it at 70, don't think that, oh, it have come to 80. It will go to 90, it will go to 100, it will go to 120. It can move to 90 and then swiftly come back to 60. Maybe your timeline for you to disinvest is due, and then you can't have the ability to hold on or wait until it moves up. Then it means you've lost. So that is how it is. For instance, some years ago, the Ghana cedi was fluctuating. Okay, so then I said, oh, then let me do some investment there. So the Ghana cedi was like, to the dollar, okay, was about 6. Before I realized, it have moved to 8. It have moved to 10. It have crossed 10. It moved to 15. Okay, so it dropped down to 13. Then I said, let me buy. So I bought it at 13, thinking that, oh, the way it is moving, it have moved from 6 to 15 and come to 13. It will move to 20. And I went to buy it at 13, then the thing stopped. 13, it came down to 11, and I have to wait until it moved to like 15. Then I converted it. Oh, I didn't lose, but the best time was when it came to like 7, and then I invested in it. I could have doubled the money. So these are some of the options. It's very interesting. Okay, let's continue. So let's look at budgeting. So you said that a budget is a quantitative statement of planned activities and events, usually covering a period of 1 year. Good. So budgets are usually for 1 year, and we have it's quantitative because they are dealing with the numbers. Okay, so or any activity you want to do, any events, if you reduce those activities and events into each monetary value, that is a budget. As simple as that. Okay, now everybody needs it, especially as professionals. Okay, we need a personal budget. You need to do it. Okay, now you said that it serves as a guide for managing resources and achieving financial goals. Yes, they are in themselves not sufficient unless the individual exercises financial discipline. Yes, so you can put a beautiful budget on paper, but if you don't have if you don't implement financial discipline, is a waste of time and resources. Okay, so if you put budgeting in perspective, this is this triangle demonstrates it. So you define all your income in the top aspects. Then you look at all your expenses. Okay, now the difference between the income and then the expense is the surplus. Okay, so it means that you should have more income. You should control your expenses to be less than the income, so that the end result will give you a surplus. A surplus is positive. The opposite of surplus is deficit. So don't get your budget into a deficit. Make sure that your income is more than expense, and then it will result in surplus. Okay, now income, I'm using income technically because there's a difference between income and revenue. Okay, income is a general term for all inflows that are coming to you. Now revenue will be monies that we generate from your core activity. So as a professional, your salary is your first revenue, but you should have more income. For example, you could create a passive income. Passive income is any other money that is coming from any other money aside your revenue, and it's very important. So it is important for you to invest so that you can get more interest, more passive income adding up to your salary. Okay, it's good for you to have some business, a good business that is generating some money from you, not businesses that will be giving you headache or that will even prevent you from even doing your or practicing your profession that you are having. There are some things you do, the next day you have to be at the ward, and then you have to even stop and travel and go and chase. No. It's not good. Okay. Okay, so let's look at some budgeting basics. Okay, like the investment banks will do, all we are also doing is recommendations. It's for you to personalize what will work for you. But the basic thing is, don't avoid saving, don't avoid investing, start small, and then make sure you are consistent. Okay, so track your income and expenses. Yeah, set financial goals, short term, medium term, long term. Let them be known to you. Then follow the 50-30-20 rule. So you look at the diagram, you have needs, you have wants, you have savings. As we are professionals, I know that we understand these terms. We've already tackled savings and we know what it is. So let's say the needs, they are things that you cannot do without. Okay, so the opposite will be wants, things that you can do without. So make sure that the monies that are coming to you, 50% is for the things you cannot do without, 30% into your wants, then 20% is saving. At least the savings is at least, so you could have 50% savings and then spend the rest. But what it means here is, like I was explaining when we were doing the mortgage, you see, it's about how much is coming to you. Somebody will have a promotion, then they will double his salary. Then he also double his expenses. Money has come. Charlie, let's go and blow some. Please maintain your expenses and then increase your savings. Okay, maintain your expenses and then increase your savings. Those who will come and help you to blow the money, when the money is finally blown, they will not invite you to go and blow theirs too. They will even tell you that but you went to blow yours, why are you coming? So let's be mindful. And as professionals, the certificate is a goodwill for us, but certain decisions, certain small things can just ruin them. So we have to make sure that that one, it is sacred and protected, and we must even improve it because things are highly changing every day. So we must be on top of our we should be on top of things and then make sure that we are abreast with issues. We shouldn't be kicked out of the market we are operating. And there are tools like spreadsheets and then budgeting apps that can help us to do this. Then let's look at some common budgeting mistakes. Not tracking spending. Okay, the thing will come. The one thing that we need to look at is the subscriptions that we do or direct debits. Hook it into the onto the account. There are some people, we don't even have banking apps, or the banking apps do not give us any prompts. Okay, YouTube subscription, DSTV, some online subscriptions. If you look at it, they might not even be important. Okay, try as much as possible to pay on demand. Okay, not a wholesale subscription. Then they'll just be taking the money. Pium, 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 pium. When you accumulate it, it's a lot of money. 2, underestimating expenses. Yes. Another thing is that you will just project that, next year, look, I'm going to receive this money. This one to come. Oh, let me start enjoying. Let me start chopping this one. This one will come, please. You can be very disappointed in that. Let the money hit your account before you make a plan to spend it. And when it hits it, make sure more is moving into savings. Then also, if the money come in bulk, why don't you delay the spending or the enjoyment? For instance, if maybe you have about 100,000 Ghana cedis in your account, okay, instead of saying, okay, let me spend 10% of that, that is 10,000 Ghana cedis. Okay, if you start it before you realize, you could spend half of it, 50,000. Why don't you squeeze yourself, put that money in a treasury bill and wait for 3 months? After 3 months, you can receive maybe 2,000 Ghana cedis from that 100,000. Then you spend that 100,000 knowing that it will keep, that one will keep coming. For all you know, nobody even knew that you received that 100,000. But you go and stand somewhere and then blow the money, spend it, and this guy have gotten money. Mind you, if the money finish and then you can't go to where you went to blow it, my friend, it's not the best. Okay. The third one, I say failing to save consistently is not good. So instead of you making direct debits or constant payments for some subscriptions, rather make direct debits, or there is a word for it, so that the bank will just deduct the money, they transfer the money into your investment account every month. Okay, that is better. Then relying heavily on credit. In business, we call it high gearing. Okay, so a lot of people do this, and it could be good depending on how you manage it. Your car, oh, you've gone to borrow to buy the car, you've gone to borrow to buy this, you've gone to borrow to buy expensive things. Then at the end of the day, look, there are a lot of professionals, nurses, especially those working with government institutions, teachers, and then doctors, all those people, they have a lot of credit on their system. So at the end of the month, when their pay slip comes, it's left with only 20%. Because normally when you go to your bank, okay, there is a banking rule that you cannot use more than 45% of your monthly salary to pay loans. It's good for us, so that if you are earning how much, 5,000 Ghana cedis every month, you cannot use like 2,000. You cannot use more than 2,000 Ghana cedis to be paying your loan. Okay, but what we will do is that you think we are beating the system. Okay, you are saying 45%. Please give me up to 40%. I'll be paying. How much can you give me so that I can be paying 40% of my salary into loans? They will give it to you. Take that one. Then there is another financial institution that will give you loan, maybe welfare credit or microfinance, that will not use the information from the bank. So you go and take this one too. This one too, you are paying 30%. You say that, but yeah, now I'm having the money. Now, when it's time to be paying, 1 year into the payment, you see that, hey, you are left alone. So you pay 40% here, you pay 30% here. It's left with 30% for you. Meanwhile, you have insurance too. You have done. Your mother will call you, your brother will call you, your friend will call you, your girlfriend will call you, your boyfriend will call you. There are some boyfriends too. Let me leave it here. You see, so let's be careful. If it is possible, let's try to avoid borrowing. And here to be saying that relying heavily on credit is one budgeting mistake. Then the last one is saying that not reviewing and adjusting the budget. Yes, circumstances change. And then things, you see, one thing is that budgets are based on assumptions. and then there are projections. Okay, so if circumstances change, you have to review and adjust the budget to reflect the current circumstance. Okay, so let's look at the broader financial sources. Okay, so one, live within your means. We know this, we've heard it. Let's practice it. You see, sometimes the way the person will say the thing to you is like, this one, oh, let me try and then help. Okay, but let's be practical. Sometimes people will ask you for monies to do things that you will not do yourself. You see, sometimes people will ask you for monies to do things that you will not do yourself. Somebody go, oh, Ali, my girlfriend is coming. Oh, can you give me 2,000 Ghana cedis? That 2,000 Ghana cedis is saying it's like 80% of your monthly salary. Why? Why? You will not do it. He's telling you to do that. And if you don't budget, the external parties and your families will budget for you. You say, but you are earning so much. What do you use your money for? So you have to budget and then make a useful meaning for your money than somebody dictating to you that you have to do this, why you do this. When you are ready to budget, you have already taken up some responsibilities that you can't even stop. Okay, we said that we should save early and invest wisely. Yes. Let's avoid lifestyle inflation. Yes. Please live a simple life. Let your bank account, let your investment account be so fat and so nice. There is no point disclosing. There's one guy, oh, me, I have 500,000 in treasury bill. Before I realize, somebody will bring you a request. When you say no, you say, but you said that you have this money. Why can't you pay this? Recently, somebody called me and said, oh, can you imagine? My cousin said you needed this money. And I said, I don't have it. I said, are you not going to buy fuel into your car? You see? You see? Meanwhile, the cousin asking for the 500. You don't know how many requests that you received. This person is asking for 1,000. This one to 200. This one 500. This one 300. This one, if you put it together, it's about 300% of the money that you are expecting in 2 weeks. So how do you share it? When you distribute it, how much will be left for you? Okay. Sometimes some of us, we are privileged that when we complete school and then we start working, we come out as the best or the tall among the family, and then a lot of people are looking up to us. Please, just pray hard. Just pray. Okay. Plan for emergencies and retirement. Enjoy your money. Enjoy your money too. Somebody will take your money and enjoy it fine. You there, you just be supplying. Enjoy some. Okay. Then we said continue learning about money management. Yes, we cannot stop here. And then read. And as I said, and as we have defined financial literacy as skill and knowledge for you to make financial decisions, understand it yourself, and then let the thing make sense to you and have control of it. Don't think that there is an investment expert somewhere that is best. There is this conflict of interest. The person wants to mobilize more so that he can trade the money and then make more profit and give you some. So he will talk to convince you. If make sure that the investment that you are doing, they are regulated, they are in the regulated space, so that if anything happens, government can get your principal back for you. Those other ones, they become so risky. That is why treasury bills rates are very low. Then you will get other investments that will be very high, because you can lose your interest, you can lose your principal, you can even lose more asset from you when you follow some of these things. Okay, thank you very much. If there's any additional questions, let's address them because I'll spend 10 more minutes.
Yeah, I think, Thomas, we do have a couple of questions. So would you just briefly go through each questions, like not taking more than 1 minute for each?
Okay.
Can you see the questions on question and answer section?
Just a minute.
I can see almost 3 questions there. If you are not able to figure out, then maybe I can read it out for you. Which one would you prefer?
Okay, I see 3 questions here. Yeah, okay. So it's for the government treasury bills and bonds. Is there often a minimum amount to pay? It will be a case by case, but I cannot. You have to contact your bank. They will advise the minimum you can take. What it means is that I'm conscious of the time. Don't worry. What it means is that if the money is not enough to start a treasury bill, keep it in the savings account, okay? Because the more savings you have, then you move it into the treasury bill. Secondly, somebody is saying, what advice will you give to an individual who is saving in foreign currency but afraid to invest the savings for the fear of losses? So for us in Africa and Ghana for that matter, saving in foreign currency alone is a big investment. Okay, like I said, if the time that the dollar rate was 6, if I've converted all the money that I was having in Ghana and even borrowed and then converted into dollars, I will have like tripled or quadrupled the monies that I was having. Okay, so that alone is it. And you have to look at it. If you convert it back, will you make more money or you can just keep it there? So one key financial decision is hold. Okay, so maybe it is not the right time now. You hold it for some time before you move it. Okay, then the another one is how can a commercial bank assist me invest? Yeah, that is their job. That is their job. They will recommend several options to you, and you will do this thing. You will take a decision. You know, your money at the commercial bank is your money, and anytime you want it, you have to take it. And what you want them to use the money for, that is what they will do. So it's at your discretion, and you have to question them and ask them the investment opportunities. They have their own, and they can lead you to get other ones. So they are there to help us. Thank you. Yeah, is there any other thing? Let me see. A quick question. Okay, sir. You see, somebody say, "Our people can feel a lot." Okay, it's to a lot. Um, a lot of financial support, unfortunately. Okay, so the last one, is said, what is the difference between a saving account and a current account, please? Okay, so for the banks, they will have 2 options: savings account and then current account. So what it means is that the savings accounts have some limitations, but current account is higher. But current accounts are more expensive than they are more expensive to maintain than savings account. So for instance, savings account you can't have a checkbook. Current account you have a checkbook. Okay. So it means that anytime you want to make withdrawal from savings account, unless you personally you go to the bank to withdraw. But for a current account, they will give you a checkbook. You can write the check and write the person who is going to withdraw the money. Give that paper to the person. The person can go to any branch of that bank and then he can withdraw the money. So because of that, they will normally not charge any money on savings accounts, but they will charge monies on current accounts. So it's just about the maintenance differences. Thank you. Okay, so I think we have spent so much time. Thank you very much for your time. And like I said, this is not the end of it. All the things that you said, there are several lessons that you can read and then understand. So let's keep educating ourselves about finance because it's basic. It's basic as the life we are having, and make good financial decisions. Thank you very much.
Yeah, I feel like since we're running out of time, we have to be considerate about that as well. So I'd like to request Thomas. I'm sure that a lot of our participants they might have questions related to this. So do you mind like sharing your account or any platform through which they can reach out to you and ask whatever questions they feel like regarding the session, even post this webinar? I think that would help us manage time. So if there is anything as such, then maybe you can share that in chat box, or as I can see you're writing in your slides as well. So
Yeah,
you
so
can, direct your question there as well.
yeah, so you can reach me on email, or you can take it out from there. If you need my
Mm-hmm.
personal any other contact, when you reach me on email, I can get back to you. My email is thomasaboji@yahoo.com. Yeah.
So thank you so much, Thomas, for doing this session. I think being a finance student, me myself, I could reflect
Oh,
on a lot of ideas that you shared during the presentation, be it like the financial literacy aspects, budgeting, investing, and the sorry
sorry.
avenues on which we can invest our monies. It was a quick reflection for me as well. Very, very informative and detailed session. I hope that whatever you have shared during this session, our participants they would be able to apply it in their real life as well. So we're
Yes.
really, really grateful to have you do this session for us. So thank you one more time. I think it's time that we say goodbye. If anybody would like, sorry.
It's
So
fine.
yeah, I think it's time to say goodbye. So see you soon, Thomas.
Thank you. And then
Bye bye,
I will be on
everyone.
standby for other interactions and engagements.
Yeah, and thank you so much for your active questions and participants. And we could not have asked it any other way. So yeah, thank you so much. Bye bye. See you soon with another monthly
Bye.
webinar.
Sure. All right.